G'day guys, Scott from FatBee Trader here. Just want to bring your attention to a trade on the US dollar Japanese yen that I've been keeping an eye on. Now, as you may be aware, the yen is tearing away, and I sort of believe, we'll see 120 before too long. In fact, we could see substantially higher. I mean, the yen is just getting crushed. The government is in the process of trying to destroy their currency by the look of it. So fundamentally, I think US dollar strength and Japanese dollar yen weakness it's just going to make this a killer trade, and has been a killer trade for those of you who have been able to catch the moves. It's all about finding a good entry spot. Now, currently, we've actually got a pretty good entry spot. Having a look at where we're at now, just sort of to sum up where the other markets are, like the US euro is just getting crushed. Took a great trade on that to the downside. The US dollar is starting to show like it's broken out of this this range it's been trading in just here, and now it's essentially tapping the top of it before looking to move higher. US dollar, Aussie dollar, or the Aussie dollar, it's just ripping again. So with this, I'm actually looking to buy this particular currency pair, which is the US dollar Japanese yen. Now, the reason for this, a couple of things. There's a pretty good risk to reward ratio. Now, I think it's going to 120. It's 200 pips away. You've got a key level here at 117.50. Now it is it's 50 point. It's a 50-point stop, so you've got to be comfortable whatever trade size you place on this. Potentially, you may only get 50 points. The next sort of level of resistance is 36 points, so it's not a great risk reward. 30 to 30, but if you're looking for the longer term, which is the 119 level, it's 101 points, and if you're looking for the 120 level, it's about 200 points. So from my point of view, this is actually a pretty reasonable trade. The US dollar has been diverging, like the yen's been diverging from the US dollar index just in this period here. Like you can see, the US dollar index is sort of getting pretty choppy. It's getting like that. Generally, to me, is a signal that we're going to see a move higher, as we have in the past. So I'm pretty comfortable actually buying this now. And in fact, while we're talking, what is the point of doing these videos if we don't at least have a crack? So I'm going to buy this now. It's a half-size position. It's 2.5 lots. Oh, got a bit of got a bit of slippage there, but that's okay, not a problem. Doesn't matter in the overall scheme of things. So again, for this trade, I'd suggest a stop place below this level here. I'd be looking to target the 119 level. I'll see how this goes today. Potentially, I may close this before the weekend if we get sort of 20 or 30 pips. While I'm still up tonight, I may just end up closing this off and taking the profit and running. So. It's sitting on a great level of support here, and you can be pretty sure that if it falls below this level, you need to get out. So I hope that all makes sense, guys, and you basically have a look at that. Just consider the trade. It's not something you have to take, obviously, but obviously consider the yen is one of those pairs that is just on a tear. So it's probably a good opportunity at these levels to accumulate some. Now, you don't have to pick up your full position size. What I generally suggest people do is do a half-size position, because volatility is so high at the moment that essentially, you can really get sort of burnt with the volatility. So just take a half-size position. Don't go too hard, and add to it when it gets to a level that you're comfortable with. Yeah, that's it for now, guys. I hope that all makes sense. There we go. We're in positive. Happy days. We're positive already. That's a beautiful sign, isn't it? Getting your getting to break even. All right, guys. Till next time. Trade well.